Okay, hey everybody, Dan Fitzpatrick here, stockmarketmentor.com. And I want to look at Axogen, AXGN. Here's why. This stock, contrary to what so many other stocks in the market are doing right now, like I know, Amazon, Apple, Nvidia, there's a crowd favorite. Microsoft, that thing really sucks. So if we look back at Axogen, this has been holding up pretty well, even in this weak market. And what we want to do is, first of all, there's no shame in not trading at all. I mean, this is a really, really, as Mark Minervini would say, it's a hard penny environment. I would say you're spending quarters to make nickels. You're risking quarters to make nickels. So it's a really tough market environment. But if you're looking for trades, this is the kind of thing that you want to look at. You want to find stocks that are working really, really well um, in relation to the market. That's what we want to see because the idea is, look, if in a really, really bad market, there's a stock that's doing pretty well, then you can bet that when the market gets better, that stock's going to do better too. And so I think this thing is a home run. Excuse me. And if we look at this on Market Surge, you can see that relative strength rating, like it's right up at the top. It's crushing it, outperforming all but 2% of stocks in the IBD universe. And that's a big ass universe. And so in 2025, the earnings estimates are for like 116% jump from 2024. So we're doubling here. And then 2026, we're coming off of a big move to another big move. So the fundamentals on this are really good. You can see earnings are picking up, revenues picking up, profit margins are right in the mid 70%. That's really good profit margin. And so then if we look here at the weekly chart, you can see that this earnings line, the quarterly earnings line, is drifting higher. This is what we want to see. We want to see the earnings line moving higher in accordance with the stock. And so in my view, all systems are go on this thing. And what you could do, because notice the volume's really light here, and that's a, I won't say it's a red flag, but it's a hard yellow one. And so what you'd want to do is if you like this stock, first of all, I'd wait for a little more movement to the upside to give me the confidence that this 50-day moving average is going to hold. But like let's say you're buying it here, you've got about an 8% risk if you're going to set your stop, say below this intraday low of 1679 or 1680. So you're buying it there. You've got your stop down here. It's about 8%. So at the very least, you want excuse me, you want 8% to the upside. You really want about 16% to the upside, which would put this up at 21 bucks. So that would really be the frame of your trade. You're taking this risk here. And in return for that risk, what you're looking for is this box to be filled up here. Whether it will be or not, it's hard to say, but I've just defined your risk for you. So I hope this helps. And by the way, members, definitely check out the strategy session tonight. I did the typical strategy session and Andy Kwong was on, and then he gave us a pretty solid tutorial on options. So it's definitely something that you want to check out. Okay. All right. I will see you all tomorrow, one day closer to St. Patrick's Day, which is the most awesome day of March.